happy earnings season to all who celebrate. The big banks kicked off the fourth fiscal quarter before the bell with a pretty mixed picture. You can see JPMorgan and Citigroup were in the green. As you can see now, just JPMorgan at the moment in the green, while Bank of America and Wells Fargo falling about 90 minutes into the trading day. Now, the big theme that we're honing in on today is what these results say about the consumer. In that vein, let's get into some of our key takeaways here. So as we look at what we saw, we've got the four biggest banks here. We're looking at credit loss provisions and net interest income. So when we think about the state of the consumer, of course, we're thinking about interest rates. And so we saw Jamie Dimon was saying, look, the economy continues to be resilient, consumers still spending, expecting a soft landing. But when you look at net interest income, or NII, that's your revenue from loans, things like mortgages and autos, minus what you pay out in expenses for deposits and funds. They had a bumper year here, but there was a word of caution, though, as we expect those interest rates at some point to start declining and that start to take a bite in here, Akiko.
Yeah, Rachelle, when you look at the major banks here, talking about the broader headline, it feels like we're seeing a bit of a divergence, right? I mean, you noted at JPMorgan, record profit here, record annual profit, I should say. At the same time, we're hearing from Citigroup about the cut to 10% of its workforce, something that was expected. But as it relates to the consumer, some interesting comments coming through, specifically on credit loss provisions. Wells Fargo certainly seeing higher provisions or higher provisions there, 1.28 billion compared with the 957 million in the same period last year. In many ways, as you pointed out, Rachelle, we're hearing about the resilient consumer, but potential word of caution on the horizon as we look ahead. CEO Charlie Scharf saying that as we look forward, our business performance remains sensitive to interest rates and the health of the U.S. economy. Also, some interesting comments coming through from Jeremy Barnum over at JPMorgan. He's the CFO there, talking about that soft landing you mentioned. He's saying, look, the consensus is for a soft landing. He's looking at the consumer resilience. He says all of the relevant metrics are normalized. Cash buffers are more normal, but that also means consumers are spending more than they're taking in. So he noted on the conference call, it's a bit of a wait and see here in terms of what we're going to see from the consumer. They've spent all that money during the holidays. How do things look come January, February, moving forward? That's a big question mark, at least as it relates to the consumer.
It's true. I mean, and even going into this earnings season, Jamie Dimon was saying, look, this is going to be the year where people finally ran out of those pandemic savings. Although I think for most people, they feel like they've run out of those savings a long time ago. But it does speak to that tipping point and a lot of the risks that they think that the markets are underplaying here. And when you think of a bank like B of A, which is even more exposed to interest rate changes because of its broader retail market there, we are expecting to see that weakness continue. So we'll continue to see that show up probably in earnings reports. And of course, the bank's kicking off this earnings season. So something of a bellwether. So I'm sure investors watching this and keeping a close eye on what this means for the rest of earnings season.
Yeah, it's going to be a busy few weeks ahead here. And it certainly is not just about those results, but also the forecast and how things look moving forward.